From our technical experts, let's welcome on board Kunal Bothra as well as Nooresh Merani, as always, to talk to us about the technicals of the markets, rather. Kunal, let me start with you. Nikhil was talking about how 19,600 is becoming a bit of a sticky zone for the markets. Do you concur? And is there more downward bias than upward bias?
Well, yeah, I was expecting a very shallow kind of a bounce. So, in fact, on Thursday, Friday, when we were discussing, I mentioned that I would probably expect 90,650 as one of the higher ends where the markets can see a bounce into. Now, yesterday I was presenting a data for the indices in terms of option play, and there was a huge amount of writing at the 90,500 call, 500 put, and the 19,600 calls for the index for the Nifty. Now that indicates that we could be stuck into this 150 points band if you add the premium for both these strikes. Now, in fact, entire day yesterday, the Nifty and the Bank Nifty was stuck into a very tight range of 60-70 points for the Nifty and I think 100 odd points for the Bank Nifty. And I think that itself tells you that the action is more indicative that the markets or traders are expecting that the markets would remain into a range. Now, at the upper end of the range, as I said, is 90,650, to be precise 665 if you add back the premium of the 19,600 call. So that's the max upside which I would expect for the index over the next couple of days. And I would expect that possibly for this weekly expiry on Thursday, we could probably be trading into this band of 19,450 on the downside and 650 on the upside broadly. So I think that's the range which I would be playing out for over the next couple of days for the Nifty.
Morning, Nooresh. Let's get in your thoughts as well as to how we wrapped up yesterday's trading session. What are the important levels that you're tracking?
So looking at it a broader base, 19,300, 400 on the downside, 19,700, 800 on the upside. We stick into this range and could continue for a week at least. And over the next 1 week, majority of the results would also be done on the broader market side as well. So we stay in this range. There are no major triggers as such. Global markets continue to be in a strong momentum. We've not seen a follow-up selling in the last few sessions. So the setup is to be more stock specific, sector specific if there are new rotations. But now is the time one has to be more and more selective in terms of the approach to the markets because we are getting into a consolidation which could stay much longer than we expect.
So let's get